Hey, Steve Saretsky here. As always, a Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value entertainment out of these videos, I ask that you hit thumbs up and subscribe. Questions, comments, put those below. I wanted to touch this week on the Vancouver housing market and some of the things that I think apply really to the whole housing market in general across the nation. But a lot of what I'm going to talk about here is actually going to be in my Saretsky report, which should be released on Monday. So if you want access to that full in-depth report, again, free every month, there is a link in the description below where you can go and register and sign up for that report. And it'll get delivered directly to your email inbox. But kind of what I was talking about is, we're hearing a lot about, looking at the June sales figures. No, not bad, not terrible, especially considering, global pandemic, deep recession. But if you kind of look at it, what I find interesting is kind of this, the whole thesis about, pent-up demand. So just to kind of contextualize, is we saw over a 60% jump in sales from May to June, so over a 60% jump. But if you actually look at that, so basically what's happened here throughout this pandemic is typically you have the spring housing market is the busiest time of the year. So typically you'll see sales volumes will peak for the entire year in usually April or May. So one of those 2 months, those are generally speaking the two busiest months. So April, May were basically completely shut down due to the pandemic. You had April sales figure with the lowest on record, May sales figures with the lowest on record. So basically the market was essentially on pause. And so, those people that normally would buy again in April or May were then beginning to transact in June, and I suspect that will be the case in July and potentially even in August. But if you actually look and say, okay, well, that was clearly, there should have been some pent-up demand because, again, these people weren't able to buy in the busy spring market. If you look at June sales figures, yes, June figures increased by over 60% on a month-over-month basis, but they were still 21% below the 10-year average. So if you actually look at June sales figures across Greater Vancouver, and let's just pretend that there was no pandemic and there's just it's just a normal market. If you just looked at the June sales figures, the conclusion that you would draw, anyone that's watching and studying the market, is that it was actually a pretty weak June. It was not a good June from a historical standpoint for the Greater Vancouver market. So if a lot of those sales are from the pent-up demand, I am a little bit more cautious about, okay, well, what does that look like then maybe in August, September, October, as some of that pent-up demand that should have transacted in the spring starts to dissipate. So in my humble opinion I think it's much too soon to be drawing any sort of conclusions as to the trajectory or where the housing market's going to be or where it's going. Again, I think this is a market it's never been more confusing to navigate. You have some houses going multiple offers. You got some products that's just sitting there going no bid. So it's a very much a market. I would classify it as this. It's not a healthy market. It's a market that's trying to figure itself out. And thankfully coming into the pandemic, because you had very, very low inventory levels, and I suspect that it's going to take some time for those inventory levels to grow. So that's kind of my view on it. What I will say is a lot of this is I would say some of the resiliency maybe in the market, if you want to call it that. I will say that the policymakers, whether you agree with the decision processes or not, if they've done a fantastic job in terms of mitigating or suppressing the economic pain. So let's kind of work this backwards. You have, first and foremost, a pause or a halt on consumer insolvencies, which were rising at a pretty fast clip pre-COVID. Consumer insolvencies actually dropped to their lowest levels in terms of a growth rate in more than 2 decades. So consumer insolvencies fell off a cliff because, again, if the courts are closed and the government's putting in these mandates that this activity essentially needs to be halted, then you're kind of just delaying the inevitable. So that's kind of helped things, number one. Number two is 15% of mortgages are in deferral. So that's prevented anyone from going into foreclosure. That probably won't get handled until Q4, and it's a long process after that. So that's number two. Number three is you have a temporary pause on evictions. So you have a tenant that doesn't want to comply. People that maybe want to sell their unit once the stuff gets lifted because the tenant has stopped paying, or they just want to liquidate. It makes it easier to sell. So that's number three, is there's been a pause on evictions. And number four, you have 8 million Canadians collecting a CERB check. And that's obviously been extended. And I personally think it's going to be extended until the end of the year. I think the jobs market, it's not good. It's a mess. You have to look at the fact is, if you are in a career, let's say, you have a job, you've been working at a company for the last 10 years, you're now laid off, and you don't get rehired, you don't just simply go and find a new job or an equivalent job in a month or two. I mean, for some people in some of these roles that are getting laid off, that more senior roles, these could take 4, 5, 6 months, maybe even longer. So again, if you're just getting laid off in May, I mean, it could take you until the end of the year to potentially find a near equivalent job, maybe even longer in some instances. And I suspect that when you initially get laid off, you're probably not going to go looking for work in the next week. You might just take a month vacation, on your CERB check. You might go camping for the summer, not worry about it, try to de-stress, and then worry about it. So these CERB checks, I think, are going to continue for the foreseeable future. And again, you can argue on the merits of whether or not that's actually disincentivizing people from getting work. But so I think all of these factors have essentially come together to really suppress any sort of pain and economic gravity. But again, at some point, the mortgage deferrals expire. At some point, you have to cut the CERB checks, or slowly try to wean people off of them. At some point, again, courts resume, consumer insolvencies start to increase. People that are behind on their mortgage payments are going to have to face the reality of either selling for sale, or the courts will decide that they're going to sell it for them. So again, I think when you factor in all of this to try to again draw a conclusion as to the direction of the housing market, again, I think is much too soon. And I'm certainly less bearish than I would have been, but I'm certainly not in the camp that I'm going to raise the give you the green light and say all good. I just think that people live in such short-term durations. They look at it and say, well, here we are, it's 3 months into a pandemic, nothing has really changed. It's 3 months in the grand scheme of things. So that's kind of my viewpoint. I think that basically what's happening is you have economic gravity contending with central bank intervention, particularly. So if you want to look at true money supply, which is essentially, you can call it, for simpler terms, money printing. It's essentially, here's a chart, the rate of growth of the money supply in Canada. So basically what this chart is telling you is that central banks are devaluing the Canadian dollar, the loonie. They're devaluing the currency. They're debauching it at a pace that is unprecedented. So if you want my humble opinion, I think that certainly not a bad idea to be in cash for now. But if you're stuck in cash for too long, a year or 2 years, I think that you're going to be sorely mistaken. These guys are clearly out to assault the currency in order to essentially mitigate, again, a lot of the pain, to try to levitate assets. So if you want to look at this, if you want to look at the stock market going up, or maybe real estate going up, you have to basically look at it and basically price it in gold terms. That's how any sort of astute investor would do. So yes, these assets may increase in price for example. But again, when you actually, it's increasing in a devalued currency as the supply of money increases, obviously the value of that asset, it's all relative basis. So that's kind of how you have to look at it. But, speaking of which, you can talk about, again, the support for the housing market, which I think is where people are really fighting and saying, well, don't fight the central banks. But then on the other hand, you have kind of economic gravity. So here you can see the Bank of Canada doing their best job. $8 billion now of purchases of Canada, almost $8 billion of Canada mortgage bonds. So again, what this does is essentially helps suppress mortgage rates. So as mortgage rates start to creep up, these guys aggressively intervene in free markets to suppress yields from rising. So if you're wondering why your mortgage rates are nice and juicy and low, low twos now today, you can thank the Bank of Canada and their central banking peers for intervening again in quote unquote free markets. So the next time that you hear somebody complain about CMHC's mortgage stress test and that how the government shouldn't be meddling in a free market, make sure to point them to that chart of the Bank of Canada. But that's pretty much all I got for this week. I would highly encourage you to check out the Saretsky report. Again, that should be released on Monday. But in the grand scheme of things, I think that it's much, much too soon to draw any realistic conclusions as to where the housing market will be in 3, 4, 5, 6 months from now, or even 12 months from now. Things are changing really on a weekly basis at this point, not only with policies, but in market activity. Again, certainly not a normal, healthy market where you can kind of start extrapolating, recent performance. So that's kind of what I'll be watching for. Again, obviously updating you as the data changes and as the data comes in. That's all we have today. So if this video brought you any sort of value or entertainment, again, give me some YouTube algorithm juice and hit the thumbs up and subscribe. See you next week.